third panelist is Mr. Aliyu Abdulhameed. When you hear of the term Essel, his name is associated with Essel. Mr. Aliyu Hamid is the CEO of the Nigerian incentive-based risk-sharing system for agricultural lending. He is a pioneer executive member of the beginnings of Essel in the Central Bank of Nigeria and has acquired a vast experience in key subsectors of the emerging African agricultural economy with special focus in Nigeria. He is getting Essel everywhere. As we speak currently, he is in the region of the Cameroonian border. Mr. Aliyu Mohammed, I welcome you. I want you to give us some insight about what Essel is doing. So this is your question. I know that the risk-sharing fund approach has become a strategic financial instrument in leveraging private sector resources to increase more investment in agriculture. What has been the achievement or challenges so far, and how best can government complement your ongoing efforts at Essel? You're welcome, Mr. Aliyu, to take over.
Thank you for having me, Thomas. Like I said earlier, it appears that this our agricultural development finance community is like a closely knit community. We tend to go around about each other, and we're getting to know each other almost on first name basis around Africa. So it's really kudos to Afraca for ensuring that we're all on one page, and thanks to technology, we can be able to touch base with each other and keep learning from each other wherever we may be at any given time. So thank you for the opportunity for having me speak. Yes, Thomas, you are right to say that the risk sharing system is one of the critical strategies for unlocking private capital. When I say private capital, I'm not referring to finance alone. We in Essel have recognized that beyond finance capital, you would need to also have ready equipment capital, technology capital, and brain capital. You have all the finances available, but you could waste it, because at the end of the day, you need to deliver results on ground. Money alone does not deliver really tangible results. You have got to match money with the other three capitals. But again, it is the finance capital that enables the three other capitals to be available. So you're right. We also realized in the last 4 years of our operations, where we are fairly new, that lenders and investors, from our experience in Nigeria, are really looking for risk return opportunities. It doesn't matter whether it's agriculture, oil and gas, telecommunications. They are totally agnostic as to it's their look, is where will they put the money, and how safe is the money when they put it in there, and what is the return profile. Agriculture, when you do it right, really can give back a very, very competitive rate of return. And the tenor of investments tend to be very short period, especially when you do primary production of cereals. One of the examples we have is when you do primary production right, you can actually move the yield of cereals in Nigeria from smallholder perspective from about, let's say, 1.8 tons per hectare, 2 tons per hectare, to about 4 tons to 6 tons. And that is 100% return on increase in terms of revenue flow. So you must do it right. You must do it like a business. You have to go to leverage science, technology, and innovation to do it. But like I said in an earlier engagement with you and other team members, it takes a village to make the agricultural system in Africa work, especially the inclusive model that we always try to do in Africa. The reality is that we can do modern 21st century agriculture and agribusiness, but we have got to square the cycle that we cannot leave the smallholders behind. We have to find a solution that we do modern agriculture, agribusiness, but inclusive of the small players. So we realized and we learned that private lenders and investors will not hold back their investment and money provided they see a compelling business case through optimized agriculture and agribusiness business models. That is one experience we know. So someone has got to spend his money, an institution, to do those baseline model building and probably put a little bit of money to prove that, even at micro scale, a model can work. Going to scale, you'll find it easy because you can answer financial questions, risk management questions, you can answer profitability questions, all those metrics that make sense to finance. So model building of the real world in action is extremely important. That's a key learning we have had in the last 4 years. Number two, that first, a risk-sharing facility institution must be solidly built. And I want to go back to what Tas has said. Really, the principles are the same. Very strong governance, transparent reporting, ensuring that your board is independent, ensuring that it's a very responsible organization. And more importantly, we also realize that investors need to know that you have capital. Your own seed capital is solid enough so that you can walk your talk. So therefore, governments must definitely, if they want to set up such an institution that can create a blended finance approach, which is a smart thing to do, because a blended finance approach technically actually preserves, it should preserve the government initial capital. And you can use the OPM approach, other people's money. But governments must put their money where their mouth is, enable that development finance institution with sufficient capital at takeoff. And the rest and the responsibility of management is to preserve that capital, grow it, and attract private capital. And we are convinced, the third one is that investors and financiers, they want to be convinced that the track record of the risk sharing facility institution, there is collaborative product development and risk management. Again, our experience has shown when you want to do, for example, financial product development, insurance product development, and even business model product development, you don't do it alone. You don't do theoretical approaches. You need to bring in the actors in the real world together on a round table, and you lay out your hypothesis, your concept. And as a research institution, you must be able to pay for that kind of session, and you get the real world players to put down how they do their work. Your job is to take very careful notes, listen, and optimize their model of operation and create a handshake along the value chain. So this sets the background to tell you some of the achievements we have had so far. In terms of the credit risk guarantee instrument, which is our key product, we have been able to successfully reduce the fear and the aversion of lenders and investors to agriculture and agricultural value chain financing in Nigeria in the last 4 to 5 years. And at the last count, we have been able to facilitate over 535 million US dollars from commercial banks and other institutions to agricultural value chains since our inception to date. With in the last 1 year, we've been able to get additional 525 million US dollars commitments across 18 to 20 commercial banks in Nigeria. If not because of the COVID condition, we would have been able to draw down on those commitments. Number three, 36% of private finance facilitated by NASAL has been directed at primary production, that is primary farming activities, a segment that is previously untouched because of the fear of loss, with the remaining 64% of our finance facilitation spread across the other segments of the value chain, pre-upstream, including inputs, processing, mechanization, and logistics. And NASAL, we believe today, is a symbol of trust for lenders in Nigeria and investors, with over 26 financial institutions using the NASAL credit risk guarantee product to minimize the risk of possible losses in agricultural finance. The rate of bank lending, we believe NASAL has contributed its own measure to raising the rate of bank lending, and it has grown steadily to about 4.80% as the end of as this last quarter of 2020. And we believe we have contributed our own quota in raising that degree of funding. Thank you, Thomas.
Thank you very much, Mr. Aliyu, for grilling down what NESEL is doing and bringing in even some of the success factors. I can see that you have made a point. It is not only the financing that is enough. You need even the brain capital and then the associated complementarities to make things work, and that those who are investors look for compelling business models. So we are encouraged that if we really want to attract, we must be on the path of implementing very good models. Thank you very much.